Hi, my name's Marc Chapman, manager of the HI Principia European Equity Fund. Reviewing the month of June, we see a resumption of macro volatility, and this has come from a number of sources. On the one hand, there's the rhetoric between the US and China regarding sanctions and trade barriers. And on the other hand, there's an underlying weakening of the fundamentals in the economy. If we look at Europe, the PMI data out of Germany and out of the entire Eurozone has seen a slowdown over the past 6 weeks or so. In addition, we've had specific news flow regarding companies. So the automotive sector is suffering from this slowdown and also potentially from the trade barriers. During the month, Daimler warned, and we've heard that production at Volkswagen will be cut back during the third quarter, and this has impact for the entire sector. It implies an ongoing slowdown, which will impact both semiconductors and automotive suppliers. Within this context, the riskier part of the portfolio performed badly during June. So one technology company we would highlight is Extron, which is a manufacturer of MOCVD equipment, which is used in lots of end markets for semiconductors. It started in general lighting and is now expanding into various other end markets, such as VCSEL and OLED. We think the long-term outlook for the company is very good, given it's the key enabler which will ensure that the technological trends continue at the current pace. However, in the short term, we think they will be impacted potentially by a semiconductor slowdown. And this is what's impacted the share price during June. Also, FLS Schmidt in Denmark, which makes equipment for the cement and minerals industry, is the world leader in terms of new technologies, which will enable cleaner, less water intensive, less energy intensive mining and output in these industries. And market share growth through time will continue to be good, but short term, the share price is obviously impacted by commodity prices. On the positive side, we rebought Eurofins Scientific during the month. This is a world leader in food testing, which we've been long of for many years. We sold it at the end of 2017, based on a very high valuation and full consensus estimates. After a more difficult start to 2018 and a large correction in the share price, we then thought the risk reward was positive again, and so we incepted a position during the month of June. Other contributors to performance during the month came from specific cyclical baskets that we have. So a basic resources basket, which holds the major resource stocks in Europe, and also a technology basket and general indices all help contribute to positive performance from that aspect. So the fund during this environment has seen a modest drawdown. In terms of positioning, the long book is more orientated towards defensive type names. So the largest names in the fund are more healthcare related companies and also more dollar sensitive companies who we think will benefit from a more difficult economic climate. The short side more revolves around individual cyclical companies in Europe, where we think the tailwinds for the business are now reducing and where we think the earnings risk is quite high. And so our intention, as always, is to search through the universe looking for those names which are overlooked, where there's a good stock-specific case on the long or short side, and where there's considerable alpha potential, while keeping the overall gross exposure of the fund reasonably high to reflect those ideas, but with a very, very contained net exposure. Essentially, the fund is market neutral at the current time, and unless there's a large change in environment, it'll remain so going forward. Thank you very much.